Let's connect with Rob Subbaraman, Chief Economist and Head of Global Market Research, ex-Japan with Nomura, who joins us live from the Nomura Investment Forum. Rob, good morning and thank you for joining us. Let's start with the GDP data. GDP data for Indian economy for Q4, which came on Friday. I'm afraid the GDP print for India continues to remain below 5.
That's right, and we think that's going to be the pattern actually for the next couple of quarters as well. So I would say India's economy is consolidating. It's bottoming out, and that's the good news. But I don't think we should be expecting a strong takeoff in growth. The economy is structurally weak after 5 years of lack of reforms, and I think in terms of macro policies, monetary and fiscal policies, they're appropriately being tightened at the moment. It's going to constrain growth near term, but it's going to be very positive longer term if India gets on top of inflation. So, 4.5–5% growth we see in the next couple of quarters. But as you get out into 2015, 2016, the trend should be upward. The one other thing I'd say which is interesting is consumption in the GDP numbers was growing at over 8%. Investment was actually negative. So hiding behind the GDP numbers was this growing distinction between consumption and investment. And it really does highlight the supply problems with investment still falling in Q1.
Rob, hi. We've got the central board policy as well coming in tomorrow. What's the expectation then from Reserve Bank of India? Status quo? Or do you think going into the second half, or rather further into the second half, I should say, we can expect a rate cut?
I think it's too early. I think we strongly believe that RBI will stay on hold for now. It's building up a lot of credibility, I think, in taking on its role as really prioritizing the goal of bringing inflation down. And I think it would be a mistake to cut rates now. And in particular for two other reasons. One is the government is going to be unveiling its budget next month. And I think it's important that RBI, wait until there's more signs of fiscal consolidation. After all, a lot of the inflation problems are because of government lacking in terms of creating more supply. And the other thing is El Nino, right? So food price pressures could build quite a lot in the coming months. And I think it's right for RBI to err on the side of caution and keeping rates where they are for now.
But by maintaining status quo, Rob, do you think RBI is not going to achieve anything? Because to kickstart the economy, what you need is a strong message. Now, the ground reality is that 50 bips here, 50 bips there, it's not going to make a lot of difference. But in terms of a signal, in terms of a message, 25 bips cut also could send a strong signal across that RBI is committed to jumpstart the economy.
I think the RBI's top commitment is to bring inflation down, and I think it's correctly being more long-sighted and realizes that if it eases up on interest rates now, maybe you will get stronger growth near term, but it could mean that India gets stuck with high inflation. I think much better for India's economy if you're thinking out in the next 2, 3, 4 years and you want to be in India for the long term, as foreign investors do, is to get inflation down.
Rob, the general view, at least with most of the money managers, is that India's time as an idea has come, and now things incrementally for Indian economy, for Indian stock markets, for Indian GDP will only improve. Do you think somewhere it's too early to sit back and assume that all is well?
No. I think the hurdles are very high now for Modinomics. I think market expectations of reforms are very high. And so we're at the point now where really I think the honeymoon will end very quickly and the investors will be demanding results. And I mentioned Modinomics, and I think Abenomics is a good lesson for India because Abenomics worked for a while, but the third arrow in the end didn't fire as investors had hoped, and Abenomics lost some luster. And I think it's going to be very critical that Modinomics and government reforms really not only start on the right foot, but continue to build momentum.
Rob, you also have the Nomura Investment Forum kick-starting from tomorrow. What, according to you, is going to take center stage in terms of policy and, economic action across the globe?
I think there's a lot of focus on the Fed and when the Fed will start raising rates. Our view is that that's going to happen in Q2 next year. But I think what that means for emerging markets and the risk of capital outflows from emerging markets and how some economies are better insulated from that than others, and what Asian policymakers need to do to make sure that Asia doesn't develop its own financial cycle, because in the last 2-3 years Asia's been attracting massive inflows and bouts of outflows. So property markets are hot, leverage is quite high. So I think there is a lot of focus on Asian central banks, but also the Fed and when it starts to raise rates.